going to do some analysis on Monday's session. That's going to just show how we were able to see that shorts were the only play during that session. Or at least for most of the session. Might have been some counter trend scalps at the very end. Let me see. Actually, no, there weren't. Unless someone trades after 5, which I don't do. The latest I would trade is the latest part of the day that I would trade is 2 to 4 p.m. That time window. That's when it gets out of the midday chop, so sometimes it's a good time. So yeah, I just got the daily session profiles here. 5-minute footprints and the DOM. So I'll just kind of go over the different things. So, right away, we're holding below this volume distribution from the prior session, which was the last session of the prior week, since Thursday was the last day last week. Friday was a holiday. And we're also below VWAP, which I got as the blue line here. So just right away, just those two things alone. And I'm pretty much looking for any excuse possible to short the market here. We also had a bearish distribution that was building volume away from that thinner volume tail. It was just kind of tapering off there. It wasn't like a really thin one like this. Got a lot of thin prints above, which, it's a nice thing to see thinner volume above. It's not a must-have, but it's preferred. Shows that the market's rejecting those higher prices. But yeah, when the market's gonna, if the market can stay down here outside of this main distribution from Thursday, then we're just gonna have a lot of longs covering. It's just gonna add more fuel to the move down. So that's something we want to be watching. We want to see if after RTH do we get an opening drive, or does it run these lows right here and then reclaim back above and rally higher? Or does it just barely go up or get like a rejection on like an attempt to test VWAP or something, and then it just rejects right back down? So I'm going to go ahead and play it. I need to get better about fast forwarding it because it's quite a drag to watch it on, regular timing. Yeah, let me speed this up a bit here. So far, we're seeing signs of a potential rejection. It's obviously way too early to be making some kind of big read or anything. I'm a big fan of being really patient right after the open and giving it some time to for the market to show its hand. It's almost impossible to get a read within like the first 10 seconds or the first minute or anything like that. At least I feel that it is based on what I've seen. Once you get a 5-minute close, and then especially 3 to 5 5-minute closes, and then the 30-minute opening range especially, then it starts to become a little bit more clear, especially during a session like this where it rejects and pretty quickly rejects and then reverses. So I'm going to speed it up again here. Sometimes I'm just going to refresh the recent bid and ask volume and the current traded volume. Yeah, so far the market is pretty much doing what we want to see, you know. It's just rejecting right back down after didn't go much, you know, up much at all, like 5 points or so. Ran this little high here. We want to see, so it ran these lows. We want to see how it rejects or how it acts when it trades back up into this, you know, whether it rejects or not. We can see a little absorption here on the footprint. On the DOM as well, we have this thin volume above, and it's forming a bit of a distribution below that. So we also had a, you know, bullish deltas here on the first 5 minute, but we actually closed down lower, so got a divergence on that. Not a huge deal, but it's a decent read there. We're seeing a lot of passive absorption from large sellers. That's what it's telling us. We can see the imbalance. Let me see if I can zoom in just a little. Over 500 lot imbalance here, where they were absorbing the aggressive buying there. So that's going to be contributing a good bit to that imbalance. Yeah, if we see a lot of that and the market's just ripping higher, then you don't want to fade it. But if we're seeing it and then they're aggressively slamming it back down, it gives it, you know, the opposite read or, you know, sign, signal. Okay, so they had flushed below this auction here. This pivot low is a good spot to watch. See how they react when they get up here. Got a bearish imbalance there. Over 300 lots. So Yeah, so it's only going a little bit back up into it, close to the bottom of bottom of this little auction here. It's about 4 ticks shy, so. Yeah, so a lot of things line up in trading. And liquidity's a little bit thin, volatility's high, we have this fast pace on the DOM. I find that those are spots where I really don't like fading it and being bullish. I really like to wait for it to cool off a bit. So I would only be thinking of shorts. And that's what I was doing. I only took shorts on Monday. I don't try to be a hero and predict something and, Powell said this or someone on FinTwit said that, and so it might do this. I don't give a damn about any of that. The order flow's bearish. We just had a extremely weak test higher. We got slammed back down. We had a divergence here. We're taking all these lows. We're holding outside of this distribution, which means we have trapped longs that are going to be trying to cover and get out, which means that if buyers don't step in on the bid to stop that, then it's just going to unwind. And we're already seeing signs that they're pulling bids because it just flushed really hard and it's not really giving us a strong bounce yet. It's got to get above this bar high at the very minimum to start thinking about anything. Even then, that's not like a huge signal to me. I'd really want to see like 15-minute highs and closes that are higher. That's more indicative of some kind of, trend potentially starting, or like a reversal. Lower time frames can get us into a little bit tighter of an entry, but I don't really find them very well, very good for determining trends and things like that. The 5-minute would be like the absolute minimum that I personally would look at for something like that. And 15-minute generally. Yeah, we're still thin volume up here. Let me go ahead and reset that. Yeah, so this is another thing which I've talked about, many times before, is, if we're looking at the candles, this was the close here and we have this long wick below. So if you were only looking at the candles, it might look like we're getting this really strong bullish bounce. But if you look inside the body and up here, there's like really thin volume up here from the high, excuse me, from the high to like the mid of the candle, below the mid. There's only like a small area where there's decent volume. And look at all this volume down here. There's just so much volume down here inside the tail. So it's actually not a rejection of lower prices. It's, if anything, it's short term on the lowest level. It's starting to show signs of gaining acceptance. But this is like micro level stuff, so that's why I generally don't look at a footprint below the 5-minute. I like 5-minute and 15 the most for like the lower time frames, and 15 is when you're starting to get sort of into that intermediate time frame with like the 30-minute and the 1 hour, which I like those as well though. So, but yeah, I mean, We got all this volume building down here. So it's not really rejection. And then it barely tests higher on this candle. And let me start, going forward a little bit here. So we're actually rejecting right near this prior low and then this close here. So it's pretty much an area that they're defending right now. So we want to kind of watch the order flow in that area. If the bulls can't flip it and get above, it's probably going to sell off. Very, very likely. So let me reset that. Let me go forward here a bit. I need to speed it up a bit so it doesn't take forever. Yeah, we had another divergence here. Bullish deltas, barely any volume at all above the open, close near the lows. So okay, so we got like this quick spike. Let me reset that. So they're defending right at the open of that bar and right below the high. So it's all really good signs, if you're bearish. And we put in a new low too, new RTH low, 30-minute opening range low. And we can even see the volume distribution here. It's just building lower here. So oh yeah, that's not just RTH low, that's the session low as well, because we traded lower in the overnight. I'll pause that for a second. I'm going to pull this up here. This is another thing, another sign. Yeah, so the market opened the week on a gap down and it failed to fill the gap. So, that's another clue that it's a bearish imbalance. And a failure to go back up after RTH open and take out these highs and fill the gap means that these large players agree with the overnight players here and they think it should be going lower. So that's what they're doing. And we've got the VIX is high as well and it's rising. So, not a really great idea to try to go long and fade that. A rising high VIX is a sign of uncertainty and fear, and it's bearish generally. So, and let me show this side. This is a little market internals layout that I got. So the purple line is the VOLD, the VOLD. That's like the up volume versus down volume for stocks that are moving up and down. The advanced decline line in blue, advancing stocks versus declining stocks. And then I just have the tick shown as columns instead of a line. Kind of, I like to visually see it that way a little bit more on here, that way. And then I got this 0 line. This is for the tick. But straight away we have these really bearish tick readings down here, like negative 1,000. And then it starts when it started consolidating a little bit in this area. It started going up into like the negative 600 to 400 type area, but it's still like, this is really bearish. It's telling us that, most stocks are selling down right now. And I've found that it's when they're all in agreement, we have like these, weak tick or even like a cumulative tick, which I have that in Sierra, but I don't have that right here. This is the regular. When they're all showing bearish or vice versa for bullish, it's usually not going to be good to fade the S&P, or you can even use it on NQ. NQ has its own market internals in it as well. They generally run pretty similar, but when they're all in alignment, though, it's pretty much short only, especially when we have, the context lining up like we were saying. We gap down, couldn't fill the gap, or below VWAP. There's stuff in the move on the DOM. We have these, we're getting a lot of absorption on the footprint. We have that prior distribution from the other session above. It's just like all these things were lining up. So it's not a good spot to be a hero and try to catch the perfect bounce or something like that. We would have to have a really good reversal signal. Something like that I would want to see before getting long off a session like this that looks like this. I'd want to see like a really strong flush down to the downside on high volume. Like a bunch of bars like this, but like really strong though. This is just like really like a grinding kind of a move down. Like this is just not fadeable in my opinion. I'd want to see like really strong flushes like this, and then see it bounce a little and stabilize like this, and then go up and start taking out prior highs. Let's see how it can't even take this out. It goes right back into this little consolidation. And pretty much rejected right below the top of that, or traded right into it. But it wasn't able to take out the high because there's a little high that poked above it. So then it sells back down. And then it loses the bottom here. So back test right near it. Can't get back above. So we're selling off. Let me get rid of that. So these are some pretty clean auctions right here. Maybe prefer to put zones for that, but went back down inside this prior auction. It rejected it, the top of it, and sold off. So, and we just have like these consistent lower highs over and over and over and over again. Cannot fade that. Let's see. This can get a little tricky because it took out this auction. But it's just, it's looking more like acceptance. There's so much volume in there. And then it's barely outside, not nearly as much volume as that, and then it's just rejecting right back down. And it would also need to take out this auction as well. So if it could have held above this and, auctioned above it in a similar manner, and then maybe a look below and fell and then back up and higher, that would be potentially a reversal there. Or like I was saying, a really strong flush and then something similar. A consolidation and a break higher and start putting in higher lows. Okay. Yeah, I just wanted to show that, that the market internals were on the same page as well. So let me see. I'm going to get it going again here. Speed it up a bit here. And so it barely tested higher. We got this thin volume and they slammed it back down. So yeah, so look at all that aggression on the DOM. And then it has like these little shallow bounces. We want to see them absorbing on the offer. And also, weak buying into the offer is good to see as well. See, they were absorbing there, it was kind of hanging, and then they slammed it back down. And we're seeing some pretty good aggression. Quick little pop up, and then they push it back down. So it's kind of like they're showing us, we're able to see on the micro level, what they're doing. It's kind of confirming our price action and what we're seeing on the footprint and the other order flow. Yeah, so we have this bearish auction, volumes building lower. Look at that on the DOM. Lots of volume going into lows there. Over 1,000 lots already. Yeah, it's really bearish. I'm going to fast forward it a bit here. Yeah, so there was strong bearish deltas on that prior bar. I don't want this to be like a really long video where I'm rambling for a long time. I'm going to try to wrap it up here pretty soon. Kind of like looked at the main points I wanted to go over. Yeah, holding outside of this, just like when we're holding outside of this, below this, it's going to lead to longs covering. And we're seeing the same thing here. Typically see a bearish imbalance when we hold outside of that, especially if they're pulling bids, which they have been. If they weren't pulling bids, we would be seeing thousands or tens of thousands of lots traded at some of these prices. And we've got a lot of these prices that are like, I mean, less than 300. I mean, that's super low. So that is not what I would consider absorption. So this is kind of the sort of action you'll see during an imbalance. And we're starting to see a little absorption here. But again, you know, this is like one piece of evidence that we're trying to fight this mountain of evidence with. Oh, I see absorption in this little spot here, so now I'm bullish. You know, a lot of traders get caught up with that. I used to do it all the time, so I just don't want to get caught up in that. I don't want anyone else to either. So when I see that, based on all of these other points of confluence, I'm not seeing that as absorption and we're going to take it back higher. I'm going to be looking at that with the assumption that they're building volume into the lows and it's going to break lower and it's going to flush it out, put in another leg lower. It's going to have to prove to me that that's not the case anymore. It's going to have to, you know, either flush, reclaim, and then rip higher, or it's going to have to be like a big iceberg and it just can never crack, you know? Let me move it forward again here. Yeah, so this is a more significant absorption spot. Well, it's kind of lining up with what we were seeing here. That's now the top of it, but we can see thousands of lots at some of these prices. And we can see this micro auction at the lows here. So if it can break and hold above this, then we can see a potential reversal. Those are some good setups. As we see, that wasn't the case. It actually broke lower out of that micro auction. So we're back onto the bearish imbalance. And it finally took out a prior bar high, but barely any volume traded, so you can't really look into that. Can't really get any kind of read off of that. Just been non-stop lower highs the whole time since the open, and then one tick above one high. So even from a price action standpoint, on lower time frames, it's just all bearish. And this is really strong. We're back into the bearish deltas. This is a spot where it starts to consolidate a bit, so I'm not going to bore you with any more of that. But yeah, that pretty much covers what I wanted to go over, and just how to add up all these points of confluence to, you know, keep us on the right side of the market. So that's a really key thing. Once you get the direction right and the bias and everything, the entries and everything are just, 10 times easier. So, all right, take care, guys.